the change in land use is one of the key things that are coming out, and that can be, say, inside the store and outside. So I think, if we think about last mile, we think about grocery delivery, if we think particularly all the money sloshing around in there now to try to drive is consolidation for rent extraction, right? You want to build as close to a monopoly in that space as possible so that you can get as much out of it as you can. And so, but I think what you start to run into is, as it becomes the focus on that, is that you run up to the unwillingness to, say, expand warehouse space, right?
And then it's regular clientele like myself still popping in and doing our thing, and when we're not buying online. So I think that's a good analogy of some of the examples of what's going to probably stay longer, because as we discovered, we'd been thinking about for years, hey, it might be convenient for me to get my milk and eggs and my bread delivered, the low consideration stuff. I always pick, it would probably be easier. I just got to get around to putting the app on my phone and creating the account and have this stuff show up, till, okay, well, now it's a real pain in the butt to go to the grocery store during the lockdowns. I have to wait in line to go and buy those 3 things. I'll order them. Unfortunately, in our case, it was like 2 to 3 week delay in delivery at first, because the logistics weren't all in place.
Somewhere close to the store or in the back room, we just move the wall, because then we can automate. We can still create a good environment for shoppers, but we can actually maintain our accuracy of our stock balance, which is an inherent issue in retailing. They've never been able to get a real good grasp on their stock balance and its accuracy and its disposition, wherever it might be, in the store or along the supply chain. But the micro-fulfillment concept actually helps us to bring that to real life. Welcome, and thank you for joining me today. My name is Gary Newbury. I'm a senior executive on call, helping businesses in the make, move, sell flow of consumer goods and services. My purpose is to inspire business leaders, particularly those within the consumer products and retailing space, to think big, be bold, scale, adapt and win, one epic supply chain transformation at a time. There's additional content available through my website, RetailAID.ca, or on my YouTube channel, RetailAID. Be sure to check it out. As the business world faces much volatility, uncertainty, complexity, and ambiguity, organizations need to be tapping into resources with an inside edge on transitioning their teams to be agile, innovative, and digital, with thought leaders, experts, and senior executives who have mastery of operational turnarounds and strategic transformations to help reorientate their enterprises. There's great material to get through here, so let's get started. Thanks everybody for joining us today. I've got Carl Boutet, Jeffrey Roberts, and myself, Gary Newbury, to just really have a catch up to share our thoughts as to where we've got to. I'm a senior exec on call, specialising in rapid performance improvement across retail supply chains and last mile. Perhaps, Carl, you can give us an update on what you're up to and what you're about.
Carl Boutet sort of coined the term the great acceleration, and go by the idea of being a retail prescriptor, trying to leverage data and insights to better anticipate what's next. But quite honestly, I'm just trying my best, Gary. That's all I'm trying to do.
and a purveyor of various baseball caps in various podcasts. And Jeff?
I'm Jeff Roberts. I'm a management consultant specialized in retail and consumer products. Principally work on the growth strategy side of things. So a lot of go-to-market strategy, new formats, growth out, anything that basically, if you want to do something new, I tend to get involved around there. But much like Carl, I think I too am muddling through most of the time.
I love it. I thought it'd be helpful for us to have a conversation about what we see as consumer behaviours, which may or may not be accelerating during the last 18 months, to think about what good responses are from retailers. We might want to break that down between essential and non-essential. We might just keep it very general, bearing in mind that some of the things that are forcing the pace for retailers are their challenges, particularly around supply chain management, trying to get hold of stock, put it on the physical or virtual shelf, and then perhaps what the likely outcomes that we might choose to kind of predict. Bear in mind that I can't predict what's happening next week, let alone a year or two ahead. So we're all in this world of unpredictable uncertainty. But I think that I've gathered together two bright sparks who will have some great insights to share during this conversation. So who wants to kick off about what they see as some of the accelerating consumer behaviors?
Yeah, well, I can kick it off, I guess, since it's sort of my general theme these days. The idea of the acceleration, Gary and Jeff, was this notion back in the first lockdown, the spring of 2020, right, where the word just kept on getting more, it was on more and more lips of executives, especially, who were just saying the trends that we are seeing, we were all anticipating. We were expecting these just not to happen this quickly. And again, bear in mind, this is the first lockdown in most places where access to retail had been really restricted to only essential, and even there, that was still very complicated. There's been rightfully some pushback on that narrative since then, because as our friend Steve Dennis would say, that he's calling about the great moderation. So sort of this level setting. And the idea for me of the acceleration was never about a push towards e-commerce purely, or digital adoption uniquely. It was more this, I've been saying for the better part of the last decade that we're heading to a 50-50 world. That's going to be equally digital as physical. And we're just going to get there that much more quickly. But if you're just going to focus on the e-commerce numbers and look at those charts that we saw in that first lockdown, that, we had here in Canada, 75% growth, and UK already had a good trend, and it was in the 50-60% range, and not evenly distributed, obviously, depending on what categories you're in. But all the same, and if that's your only KPI for measuring the acceleration, then your bigger picture of that the acceleration is really more about, as you're pointing out, Gary, the long-term trends. What are the behaviors that are both coming from the consumer, because the consumer develops some new habits and some new ways of consuming that were imposed by the pandemic, but equally, and probably not discussed enough, and we can get into this later, and I'll hand it over to Jeff after, but is the idea that the best capitalized companies in the world, the ones that have the most financial resources to invest in this acceleration and making sure that it maintains itself as much as possible, are doubling and tripling down on investing in these behaviors and making it as easy as possible for people to maintain some of those lockdown behaviors, because they have everything to gain from it. And obviously, we think about the big digital giants to begin with, but even some of the larger retail, and clearly Amazon and those. So yeah, a lot to unpack, but it is acceleration, just probably not acceleration in the way that many people are thinking about it in just purely e-commerce terms.
Yeah, I think I would echo many of the points that Carl brought up. And I think the point that he makes about more money pouring into it is, to my mind, what the big shift is when we look at this. I think if you just take the emerging category of sort of rapid delivery, right? There's so much money, particularly in Europe. There's so much money sloshing around, well, in North America as well. But we've seen emerging groups coming out of particularly Turkey, with Gitter, and out of Central Europe, GoPuff, et cetera, the guys that are there, and the early stages of consolidation coming through there. And I think if nothing else, the patterns, whether or not they were consumer driven, is almost secondary to the fact that there's so much money chasing this now that the behavior will be embedded whether we want it to be or not, simply because it'll be ubiquitous. And to my mind, I think, and this is what not to be overly flattering to Carl, but what I liked about the book was really around the idea of this theme around it's acceleration of things that we were seeing in any event, not necessarily changes in behavior, but more of a solidification of new ways of doing things. And so to my mind, things like a lot of money behind the quick delivery models. I think the acceleration and decline of retailers that were hobbling along and probably would have been able to hobble along for 3, maybe 5 more years before they, eventually the financial reality caught up with them, to see that wiped out en masse. I mean, I think if we look at the UK, the major holes in the high street fabric, that with the loss of large department stores here, Debenhams, the fall of Topshop, associated brands, etc. You're seeing a lot of things that would have naturally taken their course and perhaps wouldn't have been as dramatic, but it's the sudden shock of it, I think, that's happened. And then what to my mind is interesting is sort of what percolates up to fill the space. And so I think, that to my mind is the really interesting thing, is because we're seeing a lot of consolidation driven by big money coming through into places. But I think also what we're seeing is that, particularly if we think about it through physical space, with the decline of some of these larger retailers, it's an opportunity to rethink what's there and what we're going to do with that and how we use that as an opportunity. I'm not a huge fan of all of her work, but I think one of the more clever things that Jane Jacobs says in Life and Death or Death and Life, rather, of Great American Cities is the idea that old buildings create new businesses. And so I think what we're going to see with hopefully some of this space opening up and an unwillingness to take some of these larger floor plates is there's an opportunity to see, hopefully some experimentation, things that move along. In the UK, we have groups like Souk, which are changing the retail model, looking at it more sort of an hourly purchase, which is providing smaller, say less well-capitalized organization or businesses an opportunity to present their wares in a way that they wouldn't have previously done so. Or if they did, they would have been losing terrific amounts of money to go into a concession model in a department store. So I think what to my mind is really interesting is that we saw an acceleration, I think, of death, which said the financial side of it, I think, is what's really interesting, because on the one side, it's driving consolidation of behaviors that perhaps would have percolated up and driven their own way, but now they're being forced in simply by the sheer volume of money behind them. We're seeing consolidation on the flip side of that, places that necessarily haven't been able to keep up. So the demise of some of the larger retailers that we've seen is opening up space for new things to happen. So you could almost think of it in evolutionary terms, is that we've had sort of a great extinction in some respects, and there's new open niches there, and it'll be interesting to see what colonizes those.
Both of you raised some really interesting points. For me, the money, as you say, swashing around, trying to find these great profitable ventures in typically it'd be in the last mile or variants of the last mile, trying to find ways of speeding product from wherever it is to porches, for instance. I often wonder about that. I kind of think that P's although they've got very intelligent people doing all the analysis and stuff, but it's still a chasing the dollars or the pounds, and almost indiscriminately. And they understand their business model is, if they invest in 5 and 1 wins, that's great. But I wonder how much of the change, besides the lockdowns, the restrictions and COVID, et cetera, I wonder how much of the change is long-term change being accelerated by PEs, venture capitalists, trying to get into an area that they don't really know too much about, because retailing it looks easy. Everybody's, knows about retail because we're all shoppers, and they think, if only I could throw a bit of money at this and somehow it would all, just be so much better and very, obviously highly profitable and a great PE on buyout. I just wonder if the PE, the investments are part of this whole puzzle, and whether or not that model that they're trying to progress is actually going to have a defined longevity. I caught a post you posted, Jeff, about CPGs and about them going through a regular thing. A big multinational CPG will dump out some of its portfolio to be picked up by PE, be under the heading of some kind of MBO. But at the end of the day, the PE's facilitating that to happen, rather than the whole thing being collapsed into a sink and washed down the drain effectively. I just wonder how much PEs are responsible for quite a lot of the long-term trend that has been accelerated through this period, and whether or not their model might change to adapt to the new environment, because they've got to be thinking, in my mind, they've got to have different KPIs and different sense of longevity and what value they're bringing into the business. I just think that they've got to start thinking a bit longer term if they're going to build their own business model. And that applies to not only retailers and the small organizations that are trying to foster to get the speeding up of product to customers, but also the public spaces, the malls, etc. Because they're all up for a big transformation, but nobody's blinking right yet. They're staring at each other across the table. So I just wonder, is the way forward, just living off of what you guys have said, is a PE a key to future, reformation of the whole industry, the whole ecosystem, or are they just, am I being distracted by perhaps a preference that I wish I'd just do a better job?
So maybe just to clarify, by PE, we mean private equity, right?
Sorry, private equity, yeah, and venture capitals and those.
So venture cap and the big funds out there that are pouring the money in, which, by the way, is interesting because our sector, go back 5-10 years, had I mean, we were the last thing that anybody on Sand Hill Road was interested in what we were doing, and that clearly has changed. And another thing that has accelerated, and I'm pretty sure two analogies maybe to make a point here, but you're probably already aware of this, Gary and Jeff. I'm not sure if you're aware, but the company now, the most valuable company in Canada that overtook the Royal Bank in terms of market cap is Shopify, right? Yeah. Which, if you look at sort of any traditional metrics, makes no sense. I mean, any of the ratios you would usually. So why is that? And they're a public company, right? So this is not even private equity. I mean, private equity got it to a place, but nowhere near where it's gone since it's gone public. And the financial markets clearly have a huge appetite for this, and they're probably hedging on the 50-50 as well. That people are going into this 50-50 world, and Shopify is clearly a beneficiary. I haven't looked at their stock price today, but they tend to be around 20-30% above the Royal Bank in terms of market capitalization, which again, by any ratio doesn't work. In terms of the longer term impacts, and my second analogy that I've been sharing is, people are like, well, where do we go from here? What sticks? What falls by the wayside? And I invite people, and this is again more Canadian, and it's not a Manhattan, San Francisco thing, because I think that was already well accelerated there, is grocery. When I would pre-pandemic, I'd go to my grocery store, my local grocery store, I might see 1 or 2 pickers in the aisles going up around, and it was kind of surprising to see that. Now it almost seems like half my grocery store is pickers fulfilling online orders. The grocer I have here is a group called Metro, and they've actually they announced they were moving ahead all their investments around fulfillment. So they're putting $400 million into these smart fulfillment centers and all that, but now they're just still trying to do it with the grocery store that clearly wasn't built to cater to both having 30-40 pickers running around a 30,000-40,000 square foot space, and then it's regular clientele like myself still popping in and doing our thing, and when we're not buying online. So I think that's a good analogy of some of the examples of what's going to probably stay longer, because as we discovered, we'd been thinking about for years, it might be convenient for me to get my milk and eggs and my bread delivered, stuff that I always pick, the redundant low consideration stuff that I always pick. Probably be easier. I just got to get around to putting the app on my phone and creating the account and have this stuff show up, till, okay, well, now it's a real pain in the butt to go to the grocery store during the lockdowns. I have to wait in line to go and buy those 3 things. I'll order them. Unfortunately, in our case, it was like 2 to 3 week delay in delivery at first, because the logistics weren't it all in place. And my daughter actually worked at that grocery store, and she said it was 1,000x the demand that they went from, so they just weren't built for it. But so that's, I think, a good example. But look at all the others where sort of things are trending back, fashion and these things, obviously the non-essential, higher consideration, which, but even still there, look at I think automotive is another, I'm throwing in the third one there, but automotive is interesting because they were very early to adopt live shopping and one-to-one virtual. And I still see a lot of that, at least more of the journey is kind of digitized where it was zero almost before. So anyway, so it's still early to tell, Gary. We're still in the fog of war here, I think, but it's slowly lifting, and there are things that anything that's low consideration and mundane that's going to be the low-hanging fruit for the acceleration, and then the rest of it we'll see as new innovative business models, and I guess we'll get back to profitability later, but as these models come about and are well structured, well financed, I think we'll see them for a while. Jeff?
You hit a number of things that I think are spot on. So I think the change in sort of land use is one of the key things that are coming out, and that can be, say, inside the store and outside. So I think, if we think about last mile, we think about grocery delivery, I think that starts to run up against. So if we think particularly all the money sloshing around in there now to try to get, obviously the drive is consolidation for rent extraction, right? You want to build as close to a monopoly in that space as possible so that you can get as much out of it as you can. And so, but I think what you start to run into is as it becomes the focus on that, is that you run up to the unwillingness to, say, expand warehouse space, right? So we've seen New York, for instance, warehouse space, which was as little as 5 years ago, getting rapidly transformed into residential or torn down to be redeveloped as residential, particularly in outer boroughs, that's off the table, right? Because it's what tripled in cost per square foot on the rental there, I think, in some places, if not more. And what we're saying is, particularly say where I live in London, is that what we've seen is that the groups like DHL, et cetera, moving in and taking over what were previously abandoned depots on sort of infilled old industrial estates that had been earmarked for redevelopment in master plans years ago. And so they're reactivating them to get the cargo bikes out, et cetera, to try to push those things. I think one of the key changes that we're starting to see is what will be interesting to my mind in terms of how these patterns play out is that how do you match the obvious consumer demand and it can be generated demand in any event, right? If there's enough money behind it, you can generate enough demand, I would imagine, to maintain it against the physical realities of an unwillingness to allow new building. I mean, life in any city is, generally speaking, it's an NIMBY paradise. There's an unwillingness to let redevelopment happen or particularly to drive mixed use if it's just warehouse space. It really starts to push, I think, some of the financial issues that we will eventually come to around how long can you run with not making any money off of it? And then you reach a natural point where how long will you can run even, when you've saturated out and prices will continue to increase on the space required to make that element to the logistics side work. And you see inside retail, like if we stick with grocery, right? I mean, I think, we saw the same thing, and I did a project for a large UK retailer where we were looking around what they were going to reimagine, a large UK grocer rather, they were going to reimagine what was going to happen in store. And so the idea was, okay, right, we're going to drive more BOPUS, we're going to drive more fulfillment center, for the really large plate stores, we'll just make half of it dark, we'll turn that into a picking center so we can do that. And then that interest, starts to push us towards the picking versus, say, Ocado model of the world. And so, how are you going to manage that sort of fight, with only, I think, Kroger's probably the only one that's going hard on the Ocado model of the world of, large out-of-town warehouses where it's all automated. Because I think it sort of pulls back to, and Promises has a point, it ultimately pulls back to, I think, it's the land use side of it. And then also it's the, how are you going to redeploy people inside this space? So, I think it's long been the dream, and I say this as a management consultant, is that, it's always been the dream of the zero headcount organization, right? You wanted to basically have something where you didn't have to deal with any human beings. The reality of it, particularly on retail side, is that you need more and more of them, and more of them doing things that they weren't necessarily set out to do. So whether that be video shopping, whether that be picking, whether that be dressing rooms for those in the fashion space, to arrive to a set out model, we're asking for things to happen that previously hadn't happened, which will naturally require investment of some variety to think around what that looks like. But the investment program seems to run in the opposite direction, right? It seems to be running towards things that assume that ultimately that either that capability is there or that it's ultimately interchangeable. And so I think that the whole thing I'm saying is that you've got a lot of money pushing towards things like consolidation, last mile delivery, increasing opportunity to reduce people ultimately in these spaces. But what we've seen is traditional retailers are going to be more and more people reliant. So how do you square that circle? And then also, what are you going to do with land use, both outside the store to make these new ways work, and then inside? I mean, very much to Carl's point, how do you accommodate the fact that, there's still a large swath of the population that, given the opportunity, will take a trolley and wander through the supermarket? There's something quite relaxing about going for a shop, in that respect. It can't be if you're not taking the kids. But, the idea being, is that you go through and, they got a new variety of grapes. And how are you going to deal with that when you're surrounded by pickers along the whole way? So I think it's a really interesting thing that how when you pull one of these threads, it connects to so many other domains that I think haven't necessarily, and there's a misalignment there, right? To where the money's going versus what the expectation to deliver what the money's funding.
I think with grocery, certainly here in Canada, and to Carl's example of Metro, which I haven't seen because I don't shop at Metro, I'm a Sobeys shopper, and we've done the Voila delivery and all that kind of stuff, and it was actually quite a good experience. You would imagine, because they're, grocery are an essential retailer, they've seen massive rise in their activity level volumes insofar as they've been able to keep their shelves full. And the reaction to that may be, we need more people. Is there a better way of doing this? Yes, we can perhaps go for micro-fulfillment centers, not necessarily the Ocado solution, which is remote from the community, but somewhere close to the store or in the back room. We just move the wall, because then we can automate the thing. We can still create the good environment for shoppers, not for pickers and shoppers, which often collide, but we can actually maintain our accuracy of our stock balance, which is an inherent issue in retailing. They've never been able to get a real good grasp on their stock balance and its accuracy and its disposition, wherever it might be in the store or along the supply chain. But the micro-fulfillment concept actually helps us to bring that to real life. For an organization, given that these technologies have been in existence for quite some time now, certainly auto stores been around for about 20 years trying to flog MFCs or of some description, but certainly let's call it for the last 3 or 4 years there's been a lot of new entrants to the market saying we can do these kind of things in a very confined space. That would solve quite a lot of the accuracy. That would then allow grocery retailers to rethink their space, because they're going to face a bit of a thing when people go back out to restaurants and find alternatives to grocery shopping. Their comp stores are going to do this, and their cash flow is going to do this, just at the time when, if they used this slant up, they could have been investing in technologies which would give them an advantage going forward. Sobeys have done that, but it was a part of their longer term plan. It just happened that the pandemic fell into their hands. Loblaws are doing kind of bits and pieces, never quite sure exactly how it all fits together. They've got lots of people working on their digital. Loblaws is our largest retailer in Canada as a Canadian-based retailer, and Metro has gone to a manual process. Now, to Carl's point, the store has never been designed for mass picking. And certainly not as an exit point for the start of the last mile. It needs some civils to do that. And I don't see much appetite for relaying out the stores, because there's some organizational and cultural challenges that exist in retailing, which is stores are this, merchandising this, and everything else has to support this. As we're transitioning more into this digital age, that balance is changing fast. I wonder how the culture is changing to recognize that and to regrade certain skills and talents and expertise, because in the future and now, if you don't have stock on the shelf, you're out of sales. You don't sell, you don't get the profit, you don't get a GM, etc., and there's a natural consequence for all that. And I hear and know that the three of us are quite contrarian in our views. I hear a lot of talk about agility, resiliency. Our supply chains just in time, they've gone to resiliency, but as usual with omnichannel, the store of future, and all these other concepts, there's this lack of appetite to actually both conceive what needs to be done and actually go off and execute it and be successful at execution.
That's one of the reasons why I've always been so attracted to this industry. I've been in retail for 25. I owned and operated a chain within Costco wholesale for a better part of a decade. And so I'm very sensitive to the human. And I think that's what makes, again, this exciting, is the human element of all this. Is the best strategy in the world. Ask any sort of military strategist, it's all great until it happens on the field, right? And if that breaks down, and that's usually exactly what happens, Gary, and you're bringing excellent point around, this, we can talk about technology, we can talk about RFID and automated fulfillment and all the great stuff that technology can provide. If you don't have the culture, and cultures don't happen as quickly as technology, the changes that technology provoke, that's going to be a big challenge. And that's why I'm even impressed with organizations like Walmart, quite honestly. I think when often thinking about who's the most innovative retailer in North America, I would probably say people obviously go first to Amazon, but I'd say Walmart, because of the scale, the human scale that they're able to do it at is really impressive, especially the last 5 years. The other piece of the acceleration, or the great acceleration, was leadership recognized, if you ever taken a class around change management, step one, create a sense of urgency. And the pandemic, clearly this was the perfect example for leadership to say, hey, and the resistance is rarely at the highest level, right? The resistance to change is the highest level recognizes it. They recognize the pressure that's coming. They see what they're facing. It's usually, what below that, just below that, and even at the shop level, you're often open to it as well. The cashier being asked to go and do some advisory or do some video or do it, is probably excited about that, to get back out of the behind the till and doing something a little more interactive. So the issues after that is sort of in between that, where the problems arise and the resistance to change was occurring. Now with the pandemic, was like, hey, listen, there's no longer, I can't listen to you anymore talking about why we can't do this. It's got to happen. And just right now in my mind, I'm thinking about, last summer we had Agile come and speak to a group here in Montreal, and talking about curbside pickup, how for years they've been sort of toying around with different concepts of curbside, how to do it, and prototype, just different sort of prototyping and trying different ways of doing it. And then when New England shut down, basically, and the Northeast shut down, and everybody needed office equipment and all this they had to basically in 3 days. I was like, enough of the nonsense. Like, we got to make this work. And they found a way within. So take whatever 5 years of bickering around the best way to do it, and in 3 days we're up and running. Was it perfect? Clearly not. I'm sure there was all sorts of issues, but that was the sense of urgency and a good example of, okay, everybody's coming together, and we're no more pointing fingers. Well, that's your job. No, that's my job. It's like we need to get the laptop to the curb, and that's whatever way it's going to get there. It's got to get there. And that was I think sort of a lot of more of the acceleration too, was using this sense of urgency to realign and refocus and shed a lot of stuff too. To Jeff's point earlier too, there wasn't all positive. There was a lot of shedding that went around, a lot of adjusting. Friends here in Montreal with some large retail organizations that cut headcount drastically. And if you talk to them, they're like, yeah, we were bloated and we weren't as fit and mean as we should have been. Maybe we had to overcut because of the fact that we had our chin sticking out, and that hurts, quite honestly. And there was probably like a 20-30% we needed to cut that last 10-15. That's probably getting close to the bone. But it's the only way we could do it. And then they shed a whole bunch of real estate at the same time too, or I should say at least got out a bunch of leases at the same time too. So there's a lot of dynamics, and that's again one more reason why I love what we do, is the complexity of everything interworking. The silos we've been talking about for years, how they were getting in the way of serving the customer the way that the customer wants to be served. So this was the call to action. Say, okay, knock down the silos. Let's come together, and some did it better than others. Some are still struggling with this, and quite honestly, if they miss this curve, I don't know if they're going to be able to stay on the road much longer.
I wholeheartedly agree with that. I think that much like Carl, I think one of the things that's always attracted me to retail is that you effectively have 5 or 6 different types of organization all under the same umbrella. There's the whole sort of everything from sourcing to merchandising to real estate to all the pieces that come out of the back of it. And so I think in that respect, it's always hugely interesting, but it creates the problem that I think was very strongly highlighted rather than what we've seen in the last 18 months, which is that, yeah, you are operating 5 or 6 different types of organization under the same umbrella, and they oftentimes don't talk to each other. The clearest example of that is obviously digital and physical. The store guys don't talk to the digital guys and vice versa. And by virtue of necessity forcing you to do so, what we saw was a great deal, in some instances, a great deal of forced agility that was there. You suddenly had to go do things in a way, so some of the grocers I know in the UK, were grabbing anybody who had even turned a computer on at some point in an effort to try to build a digital presence to compensate for where they had been, but was grabbing all hands to the pump. I think what will be interesting coming out of that, and I have a huge personal bias for this, I think to my mind is the beauty of the last 18 months is that it's freed us from a lot of things which were, you can't do X because of, reason 1, or you can't do Y because of reason 2. And it's been a sort of, well, we just have to do it. So it's been rapid sort of experimentation and playing out. And to my mind, the question is going to be is what will that continue? I sincerely doubt it, because it seldom does, right? Everyone's just, you look at the return to physical retail, people want to go back to the old life. Things have to be seriously torn to bits before you get massive sustainable change. But I think that what I would hope from an organizational standpoint, and I think it's going to be retailers who succeed coming out of this, are the ones who hang on to elements of that. It can't be all chaos all the time, but what there can be are opportunities to really say, well, you know what, we did that. I mean, I think the curbside pickup in 3 days is a great example. It probably wasn't perfect, but I can guarantee you there must have been 10 years. And I've sat in these meetings, we all have. There's 10 years of sitting in there where somebody sketches a model on a whiteboard, and somebody goes to the other whiteboard and sketches a competing model. And then the two go into their warring camps, and then we can't do this, we can't do that. And you're arguing about $5,000 because, of whatever, and that's what kills the project. And I think what would be great to see, to my mind, and where this is an opportunity coming out of the back of this, is figuring out, and again, in and of itself, the figuring out process will be piecemeal, of how do we retain that experimentation or that mindset of trying things out. Because I think if anything, we can definitely see, and I say this as a consumer myself, that you're desperate for novelty. You're desperate for some variety of some sort. And I think retailers who have done a really good job of coming out of this to continue to feed that were generally ones who were good at it to begin with. So if I think about the UK, I recently visited a Lush concept store, and it was great. It was a fascinating thing to see, and they have a history of doing these kinds of things, but they used it as an opportunity to celebrate some other things. Selfridges is again, they've taken a push into, they use the disruption of the pandemic to drive more localism in their assortment, which I think is another big move. We know Walmart's doing that in the US, right, where there's a huge government funded push to onshore more manufacturing, et cetera, as the sort of wider geopolitical changes that are going on in the world. And I think retailers who are going to continue to succeed out of this, and I echo Carl's sentiment that Walmart's been amazing at this, and something that they've developed, I think, definitely over the last 20 years of being very good at this, of building the kind of environment that enables them, because of their scale, they use it to their advantage, right, to play multiple games simultaneously. And I think smaller retailers who are smart will use the same thing and try to figure out where are there things where we're just going to say, I mean, we've already had a hole blown in the P&L by the fact that everybody had to go digital. Everybody was delivering everything through 3PL. Everybody's already lost the money they were going to lose. And you would think that there would be an increasing willingness to continue that element of experimentation, particularly given the size of the potential losses are a lot lower now. And so that's what my hope for what is, if there's any kind of behavior that I hope sticks out of the back of this, it's definitely that.
What you said there, Jeff, it was this culture that allowed them to think differently. It's whether or not that can be embodied as we've learned how to share values. We've taken off the plaques. We're scrapping, the mantras and whatever. Somehow we found a way through this, and we have to understand what that way was. And it's a burning platform, a sense of urgency, the pandemic, threats from outside, wherever it is, supply chain disruption. It allowed people in silos to step outside of those silos in silos and across the organization. And the skillful leadership teams aren't necessarily those ones who are going to think about the big technology plays and big assortment changes, whatever. It's being able to understand how that market and this culture were able to align and to keep, as the market moves, to keep that alignment in place. I think they're the ones that are going to be very successful. And whether or not they move into this in a strategic way, they actually plan that out, or it just happens naturally because they've got a lot of enthusiastic people who just wanted the silos to put to one side so they could actually get on with what they thought were, and they shared a sense of purpose, what they thought was doing the right thing around here. I never expected to sort of land on that spot, but I think that's a pretty key thing. We need a real genuine push to entrepreneurship, the ability to start looking outward to where are the opportunities, rather than just saying, just come into our stores, we stack it high, and if we've got it, we stack it high, and sales down this week. Why is that? I don't know. It just didn't turn up. But to actually go out and find those markets, my big fear for retail is because we've differentiated ourselves primarily on price, getting stuff cheaper and cheaper and putting on the shelf more and more and running promos. Focus on price is not the way to focus on your future consumer and where they're going. And trying to find that space where they're heading and trying to get ahead of that is a skill that very few retailers demonstrate, obviously, or repeatedly. And it's a skill that they must learn. They must learn how to relate to the market much better than they've ever done before. Price isn't everything. In fact, price is next to nothing. And I think consumers at this time, they still have wants and needs, and their wants still drive them to say, I want that. Oh, look at the price. Yeah, what is the price? It's $1,000 more than it was yesterday. Oh, I still want it. I'll buy it. So price, consumers are relatively, obviously it depends on, which segment you're talking about, are relatively indifferent about price. What they're looking for, and to the point that you made, Jeff, is that they're looking for something. They're looking for novelty or some special thing that they attach value to that will allow them to reach for their wallet, their credit card, and say, I want that and I want it now. In terms of bringing this really interesting conversation to a close, is there any final thoughts that either you two want to kind of share or reflect on?
I think we could probably do a whole other segment just on price, because I don't know if I agree with everything you just said there, but also I guess in closing, the idea that there isn't just one path forward. It's not just there's not one. And I always push back also on the idea of future of retail. There's futures. Yeah. There's many different paths to relevance. I talk about that in the book too, because I sort of trying to measure what where the success happens and how we differentiate. But I think the more important point, and it was the subtitle of the book, is the race to resilience, and the idea that we're not done with events that are going to sort of rock our world, and they can be public health related, they can be cybersecurity related, they can be all sorts of different ways. So to sort of wrap up everything we've been talking about, and then why this race is important, is that organizations that are not going to leverage the experience they've gained over the 18 months to so they don't get quite caught as off guard as they did, and nobody could expect the level of what was coming. But now, I mean, okay, you could the shareholders and the boards are like, okay, you didn't see that one coming, but we definitely need to see the next one's coming, and we need to be better prepared. So how do we take these lessons? How do we sort of think back on the 18 months and what made us, where we could improve ourselves and become more resilient? I know it's an overused word with the agility and all the others, but it's true. We need these. We're not done with this. This is not like, okay, well, that's behind us, back to business as usual, and we'll be good for another couple of decades. It's with our climate change and everything else. I mean, there's more and more of these things that are coming our way, and we just need to make sure the organizations are as prepared as they can be to adapt. And that's for me, the race to resilience, that 50-50 digital physical. That's the resilience, is the idea that I'm as strong on one leg as the other, so that I can always counterbalance for whatever's coming next.
I have a lot of similar ideas. I think, like I said earlier, if you think of a retailer, because it is 5, 6, 7 different types of business under a single roof, what's fascinating about that is there is an opportunity there to build this resilience naturally. It's just an opportunity to think about, how do you use the fact that you've got people who do all kinds of different things. And I think it's a dirty word, really, is that most retailers haven't started out by constructing careers, right? It tended to be something you fell into, right? I mean, I know I did, and I know most other people did. And I think we need to go back a bit to what used to be, at least, because I remember when I was leaving undergrad, my dad telling me, you should look at sort of Hudson Day. It's fantastic. Or Target's parent. The idea being is the fantastic management trainee program. It's a brilliant thing you should look at. And just sort of the idea of saying, we bring people in and we use the natural diversity of operating as a retailer to create a different type of employee, so that you're using the natural fact that you are already playing in multiple games simultaneously, and that buys you some slack that something goes wrong in one. Hopefully you're able to more quickly pivot because you've got access to other things. And I think it's because, dare I say, I'm always picking fights with finance, but I think the idea is that because finance tends to look at most things through a cost center lens, they miss the fact that by running everything down to its highest level of efficiency, you miss some of the natural opportunity that exists in retail because you have such a diversity of activities that are required for your business model to operate. That you running those all as tightly coupled or as efficiently as possible actually denies you opportunity to move quickly, as we'll increasingly need over time, and how this has shown us the requirements of doing that. So, I think my big take on this is that it's an opportunity for retail, and pardon the cliche, but to go back to the future in some ways of saying, let's go back to a world where we built long-term careers. I think if you look at places like Target, places like Walmart, places like Loblaws, they're careerists, right? The people that are there, they build long-term, particularly management, they build long-term management careers. And I think that's hugely, hugely valuable, particularly if you use the internal diversity that you have of operations to build resilience across the business. And I think there needs to be more of a push to do that, to couple this experimental entrepreneurial mindset that your size and your diversity of operations gives you, and to use that to develop a new type of career that actually makes the business fundamentally more robust.
I think in closing, I'll just say this, that we're talking about resiliency and how to do things and not to be caught out in the future. But I would say our business continuity planning processes, which I don't think they've been paid attention to very well. And it also, I'm going to separate between BCP and scenario planning, which is a completely different, in my understanding, very different ballgame. Business continuity planning is saying, given that you're selling these products in these markets, how do we keep doing that with all these threats hitting us? And whether or not we can evaluate all the different risks and attribute probability and impacts to them, and then come up with an answer and maybe some mitigating actions. And I think scenario planning takes us to a completely different place and says, well, maybe we don't want to be in these categories, we want to be in these categories if this risk develops. And these consumers and will target segments. And we may want to travel down a very diverse path in terms of our future business. If we look at just these few risks which allow us to develop bold new futures. And to Carl's point, I agree, futures is key in this. And to support those futures within a scenario planning mindset is to develop capabilities and capacities to be able to switch from one to the other, as opposed to just say, oh, something else has happened, let's pile into this, everybody, and hope. So we must get away from hope. We must start actually systematically planning for these big risks that we can see, and they're obvious. Carl made mention of those, including geopolitical challenges that we're going to be facing over the next few years, because it's going to happen, but also the ones much more insidious that require us to think carefully about, okay, here's some risks that we don't talk about, but here they are, and therefore here's some opportunities that sit within these risks, and what is the capabilities and capacities we need when that happens, or the trigger for that developing, we're ready to go, because we've invested in bigger warehouses, better stores, whatever it might be, that the scenario planning informs us we need to do.
So in other words, let's keep our fingers crossed that a boat doesn't go sideways in the Suez again.
That's it.
We're gonna need a bigger bulldozer, I think, next time it
happens. So thanks, Carl and Jeff, for a really interesting and very insightful and exciting conversation. I've taken away lots of stuff from this in terms of just testing my own thoughts, and really appreciate your contributions here.
Thanks for organizing, Gary. Yeah, it's great.
Okay.
Yeah, sure, we'll have the part 2 soon.
Yes, that'd be fabulous.
Thanks everybody for tuning in. Thank you for listening today. I hope the information has been valuable for you and your team. You can connect with me via the website retail.ca and go to the contact page, or via LinkedIn by typing linkedin.com/in/last-mile. Look forward to hearing from you and playing an active part with your supply chain and your business's transformation as you start to act boldly, think big, scale, adapt, and win.